It's 4:30 already. The day just flies by. I don't know what it is. I am busy every second of the day. I love being busy though, so I guess I'll take it. Hey, welcome to Be the Boss of Your Money. This is my live stream about personal finance, investing, and all of those financial topics that come under that falls under that umbrella. So it's important to get into this stuff. I think if you have better personal finance skills, you'll actually have a better life. Today's topic, really just a quick update on what's going on with the market. We had a great opening for the first day of June that kind of fizzled out at the end. I'm wondering if Biden's proposed top tax rate proposal had something to do with it. There's a lot of noise, a lot of news about that today. It's actually the number one trending story on CNBC. Also, we had a big rally in energy. But the economically sensitive stocks did manage to rally today. So that tells me we are still moving into the reopening phase. It's not over yet. Granted, some stocks may be ahead of themselves, but stocks, when something works, stocks have a way of going from value to overvalued and staying that way for a long time. So we're going to roll the quick intro. We've got a couple of things to talk about, and it's all about financial education. So welcome. If you have any questions, definitely hit me up in the comments. Come on, hit me up in the comments. Let me know what you want to know, and I can talk about it. I can teach you. If I don't know the answer, I'll go back and get you the answer. And if you're watching this in the replay, welcome to you as well. Certainly hit me up with your questions in the comments. I'm going to roll the intro. And we're back. Thank you so much for joining me. If you're just tuning in now, I'm Mitch Goldberg. You're watching my live stream called Be the Boss of Your Money. It's all about sharing with you skills, tips, lessons, mistakes, everything you could think of over my 31-year and counting career of being a financial advisor, working directly with people like you, everyday clients. And I've seen people make a lot of mistakes. I've seen people overcome challenges. And when somebody overcomes a challenge in a certain way by doing a certain thing, whether if it's myself or a client, I want to share that with you. I want to let you in on the secret because maybe you'll face the challenge or some derivative of that challenge, and it'll help you. That's what the show is all about. I'm going to make my share screen a little bigger because we're going to get into this right now. Let me share the screen right here. Let me share the screen right here. So Dow up 45 points, was up about 300 to kick off the day. Markets just fizzled out at the end, and it just turned out to be a pretty ho-hum, uneventful day. Now, that's if you just look at the major averages at the close. But I do look at the action from 9:30 a.m. to 4 p.m., the trading hours of listed stocks in the United States. And when I see a good rally fizzle out at the end of the day, it doesn't necessarily mean it's a bad sign, but it's not a good sign. What has investors worried that they can't keep this rally going? Did enthusiasm go away? Now, just so you know, historically, September is the worst. Historically, on average, September is the worst month of the year for the stock market in the United States. June is second. So we're starting June, but, maybe people figured we'll sell in May and go away. And speaking of May, let's just take a quick look at some facts that I have for you. Small cap stocks as measured by the Russell 2000 had just in May were up. They were up now 8 months in a row. Best stretch for small caps since 1995. NASDAQ was down in May, breaking a 6-month streak. And the Dow continued to go up 4 months in a row. So these aren't terrible. Look, if you look at from how much the market's up, forget for a second just from the bottom of the pandemic market to where we are now. If you go back to the previous highs of February of 2020, you're still doing pretty good. I mean, if you literally invested right before the pandemic, put all your money into the stock market, you're still doing relatively well. And this is why I like to say it's not a matter of timing the market. It's about buying, waiting, being patient, because lo and behold, the market has done quite well, even including the pandemic. So I know, I know the media likes to take a look at how the market did from the bottom. Oh, if you bought at the very bottom, the worst day, like March, I think 20th or March 21st, the very bottom of the market, you would have done so well. I mean, who was sitting on all cash that day and decided to invest all of their money that day and made all of this money in the market? No one. So that's why I can't stand when people say, oh, look how much the market's up, though, since the bottom. Well, maybe the market should never have been as low as it was. Obviously, it shouldn't have, because it didn't stay there. Obviously, right? Give me, come on. That's one thing. Another thing is that maybe we have to be real and say most people were invested before the market tanked in February and March of 2020. And even again, if you invested all of your money, lump sum investing, the day before the market, started to go down with worries about the pandemic, you would be doing just fine right now. And that's what people have to take into consideration. Now, you could have said, well, I dollar cost average since the bottom till now. Okay, that would have been great. But again, you would have started at the very bottom. People were dollar cost averaging for years before the market tanked. It just points out to something. Over time, the stock market generally goes higher. The reason we in the financial services industry, the reason that financial advisors focus so much on volatility is because we understand how important it is to have a portfolio that you could stick with. Not a portfolio that's supercharged for super high returns, but that you're going to bail out of. This is more about behavioral finance than anything else. Everyone has a threshold for pain. I feel as a financial advisor, I think my financial advisor friends would agree with me. It's our job to find your threshold for pain as if you're a client and not get to that point, or at least do our best not to get to that point. And you do that by educating clients, by teaching clients about market history, by creating an asset allocation model for clients, which takes into account not just stocks, but international stocks, small cap stocks, mid, large stocks, bonds, cash, those sorts of things, and creating a portfolio that will help protect you on the downside, or at least help prevent your portfolio from going down as much as the general market to the downside, so that you could stay invested and make money over time, because it's about time in the market, not timing the market. You've heard that before, right? You certainly have heard it from me if you're a watcher of this show. So let's get back to the matter at hand. I'm going to go back to the share screen, pop myself up here in the quarter. NASDAQ off 12, S&P off 2 points. Nobody has anything to complain about. Nobody is complaining. If you notice gold, though, right here, gold is at 1,902. Gold has been steadily creeping higher, while crypto has been getting all of the attention, right? So gold has been steadily moving higher when everybody said that crypto is the replacement for gold, but crypto has tanked, and very stealthily, gold has been going up, now a little bit above 1,900. And that is, I think, an indication not of fear. Okay. It doesn't mean that there's fear and worries that inflation is going to super spike tomorrow and we're all going to get wiped out. No, that's not what this is about. What it's about is just that investors have to factor in that there's a little bit more inflation. Now, is the inflation long lasting? Is it durable, or is it transitory? That's what we're trying to figure out. I'm more in the camp that it's transitory. I'm more in the camp that it's mostly a good kind of inflation where businesses, governments, the whole global economy does better with a little bit of steady upside inflation, as opposed to a little bit of deflation. I mean, if you think about it, when prices go up, you're paying more sales tax, right? And when you pay more sales tax, I don't know if that's my screen blacking out or if you can see that or not. Let me know if you can, but I'm going to stop the share screen right here. So a little bit of inflation because business is good, the economy is good, is okay. It's more of a good inflation as opposed to a bad inflation because of a monetary policy mistake, just because of just too many dollars sloshing around. Okay. And a lot of dollars that have been pumped into the economy are not even going into the real economy. A lot of it is going into the stock market. A lot of it is going into the housing market. And yes, of course, that's the real economy, but not all of it. I just want you to know that. Okay. Oil, though, was up 2.5%, up $1.62 per barrel. Let's see if no, I don't think the screen share is working today. So the 10-year treasury at 1.61%, and the VIX was up a little bit today, but still under 20. It's about 17.9 on the close. So a couple of things we need to also take a look at is crypto continues to come down. JP Morgan came out today and said that big investors are not buying. Damn it. I wish my screen was doing the share screen. I don't know what the deal is with that. I have to tell you, I'm pretty much made up my mind. I'm in the market for a new computer. I have a really good computer, but I want a better computer. The live stream is just being affected, and that kills me. You know how important the live stream is to me. JP Morgan says big investors are not buying the Bitcoin dip and prices could fall further. Listen, people's forecasts are all over the map. I mean, is Bitcoin something huge and wonderful? Is it is it like Dippin' Dots, the ice cream of the future? Or is it, just another fad and there's no intrinsic value and people are just getting excited over not much? It's tough to say. I do think people like Mark Cuban and Elon Musk and a few other heavy hitters need to be careful with what they say, because I think it attracts people into it who don't have the sophistication to understand the risks of this stuff. I'll even say the same thing for Gary Vee. I'm a fan of all these people, by the way, but I think people have to be a little bit more responsible and at least say, hey, you know what? This stuff is risky. You could lose all your money and don't come crying to me. I think they need to say, I'm not your financial advisor. I'm not your mama. I'm not your papa. They need to do that. Okay. So let's get back to a couple of other things. Let's do the watch list. I'm going to see if I could do a better share screen than what we were doing. So I'm going to do share screen. Oh, this is going to be a little bit better. Share. Does that get in there? Add to stream. How's that? Is that a little bit better? Okay, I could live with that. So here's some of the industrial stocks that we talk about. Wabash. Have you ever heard of Wabash? Wabash is a trailer. You see a tractor trailer going down the highway, down the interstate. The trailer usually often has their logo is a map in red of the continental United States with the word Wabash across it. Now that I talked to you about this, you're going to see the name Wabash all over the place every time you pass a tractor trailer. Every time you see an 18-wheeler on the highway. Boeing continues to move higher, up 3%, 254. That's a stock we talk about a lot on this show. Hope you've been paying attention. Let's take a look at some of the FANG stocks. I have a bunch of watch lists that I keep an eye on. Okay. Google had a good day. That's a stock that all these stocks we talk about a lot here. But these stocks are off a little bit more than down, but nonetheless, nothing terrible. And that's why I think you saw the S&P 500 close flat. Let's take a look at some of I call them the Corona list. It might not be the best name for a stock list, but I came up with this like a year and 4 months ago, the Corona list. But Peloton coming down, Zoom down, Domino's down, Activision down, a lot of down, Dash, DocuSign. By the way, DocuSign, I did a whole thing comparing Zoom, DoorDash, DocuSign, a couple of other stocks, Teladoc. Which stock do I think has a business model that will not slow down, that I believe will not slow down when the economy recovers? And that one is DocuSign. And DocuSign was what, about 160, 170 when I said that. Now it's 200. And I still believe that. If you're a business and you use DocuSign, you're not going back. I am anytime I could use DocuSign, I will use DocuSign. When we all go back to the office and we're all back to normal, DocuSign will be the way we share documents, archive documents, and sign documents, not going away by a long shot. And let's go back to the watch list real quick. We've got a few other things to take a look at. The sectors, we always do the sector ETFs. Energy, real estate moving up. By the way, talk about the pandemic and how it affects real estate and office properties, commercial office properties. XLRE, the big ETF that tracks real estate, it's at its all-time new high and all-time high. So did you miss something here? This is why we don't make knee-jerk reactions on emotion. Materials right at their highs. Financials are up today, right off their highs. Industrials right off their highs. Pretty good. In the meantime, technology moving below its highs, utilities below their highs, healthcare below its highs. What this tells you, it tells you that investors continue to favor the industrial, economically sensitive / reopening stocks. And I think that's all we want to cover on that. Last thing I want to cover is this. 35 blocks were leveled. I find it amazing that 100 years ago, white mobs burned Tulsa's black neighborhood to the ground. And this, from what I understand, was a pretty wealthy town. It was called the Black Wall Street. There were movie theaters and businesses and hotels and restaurants. I find it crazy that something so big I never learned in school. I never heard of this until like a year ago. It's just one of the most remarkable, I guess, cover-ups that we've ever seen. And it kind of, I mean, if this doesn't jerk at your heart, then maybe you have to check if you have a pulse. But this is really something that is both enraging and the shock that the freedoms, the wealth, the lives that these people had. And these, you think about all of the children who were either never raised properly or had their opportunities taken from them. What could have spawned from this thing, if this didn't happen, is you could have had a whole wealthier group of black people who would have been descendants of these people, because all the family money and the businesses and all that. It really is incredible. Of course, the human toll, the people were murdered, homes and businesses ransacked, destroyed, burned to the ground. I just find it crazy that this was covered up for so long, and now it's coming up. And I think we need to talk about it and address it. And no, I'm not being woke by bringing this up. I just think that this is the biggest thing in the news now, for good reason. And I think we need to take a good hard look at some of the dark history of our great country. It doesn't mean you have to hate the United States. I love my country. It just means that we have to take a look at these things and talk about them, because now that we know about it, we can't grow. We can't grow as a nation, if we don't discuss it, acknowledge it, and learn from it and change and just show empathy. Show empathy. We have to stop thinking that this is a world of scarcity. Like, well, if these people get something, then our way of life is going to be ruined and we're not going to get what we're supposed to get. You've got to stop. Not you. I'm saying other people have to stop thinking that if one group gets something, that it means less for another group. Opportunity spreads its growth. Scarcity is cancer. A mind of abundance. That's what we need. All right, so that is it for today's show. I see a few people out there, and I thank all of you for watching. I'm going to get going, and I'll be back tomorrow with some more notes, some more updates, and we continue to keep on with the reopening play. It's continuing. TSA numbers are going up. Restaurants are opening. Half the country is now fully vaccinated and growing. And a lot of people, tens of millions of people who've been exposed to COVID have the antibodies. So we have a lot of good things in the economy to look forward to. So enjoy it. Don't get overly negative. Don't get overly pessimistic with inflation. Don't think that every day is going to be the inflation nuclear bomb going off in the market. Just calm down. A little bit of inflation is something that we've wanted for a long time. You know, we've been pushing for some inflation for a long time. We're getting it. A lot of it's transitory. I already see the price of wood starting to come down. The semiconductor sector is recovering, and we will catch up on semiconductor demand. Just a lot of supply demand chains have been, broken, and they're getting fixed, and it's happening pretty quickly. All right, that's it. That's my story, and maybe I should play some music here. All right, the music's playing. We've got to end the show. All right, thank you very much.